saying amazing stuff, and it speaks a lot to what you guys are building. And from someone who's been all about education for a long time, it's great to see so many people stepping up, because I think everyone that takes that leap and learns is you have to understand there are so many people in this world that just want to be given the fish for free. They expect everything, and then they get upset when they lose. And, those of you that are actually educating yourself, it doesn't just go right to trading crypto or trading stocks or commodities, but the things that you learn, including the discipline, right? Discipline is so important. It translates into all aspects of life, right? And it improves all aspects of life. And I think that's the important thing about it as well. So really cool stuff. Well, for me, it was unfortunately going through the hardships of that type of thing, right? So growing up in my first years of trading in the late 90s with the .coms, it was so like I was having these flashbacks to the .com era when I was watching what was going on in crypto, and whether it's the emotion, the greed, all those things were going on. And I had learned the tough way, right? I was the beginning trader in the .com era, where I learned the hard way. I saw everything collapse. I lost money during that period. And there was, it's interesting because every year in the markets, it could be commodities, stocks, or crypto or anything else, there's always a bull market somewhere. And generally these things tend to repeat over and over. So I wish I had some master formula, but it's honestly, it was going through it so many times where you get caught in it in the beginning. Then you start to it's like touching a hot stove. You get burned a couple times and you're like, wait a minute. And then it's kind of starting that discipline road. You start to kind of recognize the cues. You say, listen, don't get caught up in the hype. And it's kind of building that framework for being that trader, where you become much more robotic, right? It's not about the emotion. You learn to not chase things when they're running up and everyone else is chasing. So I think for me, that's what it was. It was learning from experience, in my early years as a trader. You've watched it go up X amount, and then to not, you're going to get, the markets tend to they're going to push everyone to their limits, right? Even myself, when Bitcoin last year was hitting that 69,000, it was just above that April high. I mean, I couldn't help but say, whoa, could I, is this one of those times where I'm going to be wrong? And again, it's just saying, I guess part of it too is that always remember that there's always another trade, right? So you may miss Bitcoin, you may miss this crypto going higher, 10xing, but the discipline is what's going to ground you to not get caught off guard. And if you miss one, it's okay, because there's another one coming around the turn, right? So you have to always remind yourself of that. And you will be wrong sometimes. Sometimes things will go up and you're not on board. But just remember that it's that discipline that is going to hold you safe. And being safe as a trader and being kind of that, and put it to you this way, is every time I go in a trade now, I go in thinking I might be wrong, versus a lot of retail, when they go into a trade, they're already calculating how they're going to spend all the money that they're going to make, right? And it's going in thinking you could be wrong, that mentality that keeps you from putting your whole account in one trade, which obviously is not a good idea. And also preparing, how are you going to trade around that position if you need to? Where are you going to stop out? What are you going to do to kind of limit the damage that gets done? And so I think that's really key as well, is just having that game plan, having that thesis, right? And anytime you go into a trade, and this is the same with Bitcoin, is that even when we were at 69,000, I kept on asking myself, has my thesis changed? And remember, thesis isn't, oh, I feel it, or my gut is telling me, or anything like that. It's like, it's got to be, you got to think about standing in front of like Sheldon and defending your thesis in front of him. And if it doesn't hold up to him, then it's not a good thesis, right? It has to be technically based and everything like that. So yeah, I mean, it's an amazing stuff. And I think trading is just, it's one of those things that you can do. And I always say this too, and I'll say this, I know you have a lot of the people that you educated here, is that the best thing about trading, and I always say this, is that you could be 95 years old in a bed, and as long as you can click your finger on a mouse, you can make money trading, right? And so all of a sudden it's very liberating in terms of financial freedom, where, obviously we want to save for retirement, but again, being able to make money almost at any point in your life by going into the trading markets is just an amazing freedom thing to have. Absolutely. So I call them factors, but basically what I look for is at least 2 factors. 3 is ideal. Sometimes you'll get more, and they could be, in terms of technicals, they could be, double tops, double bottoms, bottoming tails, things like that, plus a pattern or a time factor. And so there's different things that I'll look at in that respect. And then one of the keys that I think a lot of investors, and I was talking to some traders this morning, and they just they weren't getting this aspect, is that even when you have factors, you also have to do an analysis of risk reward, right? So if you're going to end up making 50 cents on a trade, but you could lose $20 because it's run up already, for me, it may not be worth it for me to take, even on a 3-factor trade, that trade. I may just step aside and say, you know what, I'll pass, I'll wait for the next one. And so it's exactly what you're saying. It's having that plan ahead of time, having that checklist, and then utilizing it. To say, I keep it very, very simple. Like I use moving averages a little bit, but generally the bigger moving averages, because those are the more powerful ones. Fibonacci, like you mentioned, support, resistance, drawing my own trend lines. I don't put a lot of these crazy indicators on my chart, honestly, because I don't understand half of them. And if I don't understand it, it doesn't, it's not going to work for me, right? So you always want to be able to understand what you're using to trade, so that you can adjust and kind of analyze it appropriately. But things I'm keeping an eye on is that you can clearly see that the current price of Bitcoin is still below that June low right there of support, right? So we know that this is a drop. So this is technically a bearish inside bar pattern, bearish flaggish in spirit of bear flag. And it hasn't even been able to regain the price point from June. So for me, that's a major issue short term for Bitcoin. I still think we could go up and touch that line, but that'll be a level that I'm watching closely. Overall, I continue to be in the camp where this area down here, which I think is right around your 14,000, 13, 14 area here, 14, this is going to be a big level as well. And I do think eventually we retest that level on the downside. Now, for me, I kind of took it a step further when I was analyzing like where Bitcoin could bottom. I've been doing a lot of research because everyone wants to know where could Bitcoin bottom. And obviously, please keep in mind that this is just an opinion based on charting and history. But for me, I basically took FTX's fiasco and I likened it to the Lehman Brothers collapse in the stock market. And this is where my stock education kind of comes in, where I can bring these things out that I went through as a trader and kind of use them. And so when Lehman Brothers collapsed, it was a bank. They took on too much leverage. They did some stuff they shouldn't have. And eventually they failed. From that point, the stock market dropped 45% more till the March low of 2009. And it took about 5 to 6 months. So if FTX is kind of that scenario for the crypto markets, it puts the bottom on Bitcoin somewhere in I would say the May to June period, right? That 5-6 months out from now period. And it probably puts us right around the $10,000 to $9,000 range. The reason I like 10,000 in terms of a break point and thinking that we could break that on Bitcoin is simply that that's going to be where max pain is probably initiated for most crypto investors. So we know psychologically, investors probably will put stops at 10,000. We know that psychologically that's going to be like, oh my goodness, if Bitcoin ever breaks 10,000, it's going to be a fiasco. Everyone's going to freak out about it, which oftentimes can be the marker of a low in a chart or you have to be strong enough to just say, no, this is the thesis. This is what happens in bear markets. Let's withstand it and let's look for that reversal.